Right, I've now gone and got myself into the...
Todos queremos invertir, pero ¿qué pasaría si la inteligencia artificial?
Right, let's get going. I can zoom this down so I can see what the heck I'm doing. Right. Okay. Let's share a screen. Share a screen. Donk. Can you all see my mouse okay?
Yeah, fine.
Right, okay. Rightio, let's get oh, where is every they're all coming in now. I'm gonna say, where is everybody? And Billy no mates. Well, Billy with a few people.
Good morning.
Morning, yeah. I was off yesterday and again off on Friday with visitors. So I just can't stay away really. Right, well, what difference a trading day makes. Oil 17% drop from the highs on Sunday, which is huge, and then 7% on the ceasefire. So that was huge. Turned oil from absolute bullish to bearish straight away. Same with gold as well, flipped back and forward. Everyone running from safe haven assets, and the chicken lick and the world caving in is no longer caving in. Economics today, we've got 1:30. We've got the Canadian dollar looking at CPI, which is a measure of inflation. That's expected to come in at 2.5. So watch out for Canadian dollar trades if you're in them and want to look at those today, this morning. 3 o'clock, Bailey's speaking, testifying before the House of the Economic Select Committee, House of Lords. And 3 o'clock, Powell testifies before Congress. So I think people are probably waiting again, as we generally do, on Powell saying things about interest rates and what we can do on that. The daily edge today, let's get the daily edge today up. Here we are. Apologies for my formatting. It's all over the place at the moment, and I don't know why. I was cutting and pasting and reviewing and analyzing and chopping, and it's a little bit off, but I guess you get the gist. Quite a long one today, 8 pages, because it was off yesterday, so obviously I've got a lot to say. So yeah, so we'll go through what we're doing today. FTSE, of course, the S&P, of course, and added to that for the third one today was Euro Japani. But there are all the things I want to look at. Aussie USD could be a really good one. Cable could be a good one today. Euro USD could be a good one today. But we've got to hone down on those things that we want to trade. Don't forget, we're trying to get 1%. If we can get 1% a day, that would be astronomical, because it's difficult to do that. And we've got a whole bunch of opportunities here. So let's see where we go with that. So risk on situation, of course, because of all the news. I'm not going to go through all the actual news, but the biggest headline really is oil from Sunday night. Wow, 17.3. And yeah, we're back on a risk on. So let's get this out of the way for the moment. And let's have a look at what we can do. So let's go on to the FTSE. This is I just took the on the news yesterday. On this, ceasefire really comes into effect about 5:30 this morning after the last salvo from Iran with the missiles. So that's kind of normal stuff on wars, isn't it? Showing the last strength. So hopefully everyone will be buoyant today, and it will be a rah-rah risk on, which is good. So don't expect. Did anyone take any USD Japani trades yesterday on the news? No. Anyway, so if we forget all this is just me. So today we're looking. This is a fractal break, as well as a 15-minute bar below hourly support here. and I've got, just ignore my trade. We've got a monster trade on here, going for probably about 8%. But for today's trade, we're looking at a fractal break, which is here on a 15-minute fracker. So you could have took a 15-minute bar here, but you're on 15. You're on a break. So we want to make sure that the market, if it's going to bounce up. But if it's going to break the fracker here, then I think all bets are off, and the market's going to come down with the ceasefire sentiment. Back to the FTSE. So we're going to look at closing the gap on the FTSE. So what I had, flipping heck, that's been rattling up from this morning's review. So you can see we've got not a wall trade coming up because we're very bullish on the 4-hour, very bullish on the 1 hour. I was going to, and started to put something together. I was going to publish for you guys about sector breakdown. So you keep getting asked about the constituencies of the FTSE UK and the main drivers, especially by market cap. And with oil coming off, big driver on oil, you expect the FTSE not to pull up as hard as it can, but as it has. So I'll put that into a PDF and put it in the room for people to hold on, pinned to the wall, just so you can see about what are the main drivers in the marketplace. To keep getting asked. Yesterday, saw some great trades that people had done in the room, and that trade there looked to me like a bit of a cracker, and people took it earlier than I would have done. But in the morning, that was the break in the morning to go to the gap up here, and a few people did it really, really well. So it's nice to see in the room that people aren't trading the gap without me pointing out where the gaps are. But that was lovely one-to-one trade into there if you'd done that. Or I think it was Simon who did an early doors trade from these levels and did really, really well. So well done, guys. Today, we've got the close all the way down here. We're above camera breakout long, so we don't really want to be trading that gap until we break under here. We've got 24 pips. ATR today is 8. So we don't really, we're on a C-ball breakaway. One thing I want to do here is we'll watch this on 5 minutes. We need the first 5 minutes of action. And the obvious trade is to go to R3 today, which is a wall trade if it was negative, but we're not negative. So interesting thing would be a bounce off camera breakout long again to go long. But the market is very rah-rah. The thing is, guys, do not follow the trader because you could get the shirt ripped off your back. You've got to wait for the correct setup to trade. So quite relaxed about this. The market is open now, and this should go through, it's very close. This target 88.24 should be an easy one, and it's a bit unfortunate. Has anyone been practicing the night from last week doing the 926 trade in the room? Anybody? No? That's okay. I didn't do myself either. So we're waiting for the first 5 minutes of action to conclude. Goals turned very negative straight away as well. Well, you know, all right, okay, we'll cheer for something I don't do very often, which is turn the gold bot off just for the moment. So I'm taking gold out, the fracker bot, taking that, switching that off just at the moment. I'm switching relentless off on gold as well. It is negative at the moment, and we'll go and review that. And we've got BTC robots trading, but never mind. Want this market to, so today we either want to be taking a bounce off here, and the daily high is above the close, and we are trading above the daily high. Can anyone remember what the daily high is called? So we've got a closing gap here, and we've got a high of yesterday. Right, okay. Extreme gap, that's the extreme gap. That extreme gap is highly likely to be filled. Now, I would minded to go, even though we are very bullish, really minded to go for the extreme gap if we break this level here. If we break these levels here, market breaks down through here. I'm tempted very much to go for an X gap where ATR is 8 and we've got 16 to the extreme gap. So what I think I would like to do, we need an ATR stop at least with a little bit of wiggle. Let's call that 10 pips. So I'm gonna, if you put a 10 pip stop in and a larger target of let's say 17, front run the gap, 1% trade, a break into here would be a breakdown of 88.03. We'll call that 16, not 17. So it has to break here to open up that structure. There is a phase wave here. And the thing is, this is not cash hours, but you can certainly see this box here, bit of confluence here. And we all know what happens when confluence is broken out. It exits in the same direction as it entered. So the market came up, went along, and it will go to the top 8 times out of 10. It will do that. I think the 88.24, unfortunately, is going to get whacked before we get a chance to come all the way back down again. What did it go up to? 23, man said 24. Right. Do we sit and wait? What, we've done 4 minutes now, haven't we? So the extreme gap is highly likely to get filled today. We may leave a closing gap, but on the FTSE, you very often see extreme gaps that close within the day. So this is a high probability target for the day, even though the market is very bullish, but we need structure broken here to go for it. So we kind of call that all 3. We might as well just leave that there. $10 pips down, 1.6% potential there. 1% risk, 1.6% target. Let's just put an alert in there and look at something else while we're looking. So put an alert down into here. And we will put an alert into R3, into here. So whatever happens, we'll get an alert. So the FTSE is pretty much on a rah-rah. What's the 5-day ATR for this? Let's just get these out of the way. That's my Excel spreadsheet. Okay, 5-day ATR for the day is 56. How far away are we from the close? So we're roughly at a 5-day ATR move now, which would mean if you were pretty bearish on this, 17 pip stop, 17 pip target. I don't really want to do that against the trend, not after the news. I want to wait for this to break down. Let's go and have a look at that massive move on crude. Just save this. We'll come back. We'll come back to this. Crude. Right, let's zoom out. How quickly things can change from Sunday evening all the way up here. We can measure that. We've got 17.3% in less than 2 trading days. Absolute monster coming down. So we are trading technically, well, from a ceasefire.
Alert trigger.
We've got an alert here. As the FTSE now move back, I put these alerts back up here. Oh, it's crude. Right, okay, I'll just take crude off. We're on crude anyway. Oh, and USD Japan. Right. We'll have to go into USD Japan as well. So crude and USD Japan. Right. So we're tick absolutely negative. Let's get me pen out. So there's a 200 EMA here on the 4-hour absolute negative, and on the 1 hour all the way up here. Normally, when markets drop like this, you normally see a 50% retrace before it even goes down. But with the 12-day war, as Trump is calling it, I think people are certainly going to be risk on. And if there's a ceasefire, the threatening of closing or restricting the Straits of Hormuz is gone on all intents and purposes. So this will be looking at oil coming down to $62 a barrel, possibly. So if we look technically where we are now, about $62 here, and the market, you can see the market has really rallied up with the warmongering. So the FTSE has opened. We'll go and look at the FTSE. I would like it. Let's just put this into 15 minutes. I'll put some alerts on here. The market comes back up into this confluence area. We'll have a bit of that. There is effectively a double tap here. Let's get rid of this. I'm not a big supporter of shorting oil, to be honest, at the moment, but the market's always right. No matter what you think, the market's always right. And let's get rid of these. I think probably a break of here would confirm the next phase wave going down. So I'll put an alert under here as well. So we'll track the price on crude, and we'll come back to crude and see we can get a trade out of that. But for the moment, we're trading the FTSE. Hi Tony, I didn't see you typing that in on I didn't see you typing in extreme gap. Sorry. Yeah, absolutely spot on, Tony, very right. So FTSE. Let's get this drawn bar. So this is the area, the structure we wanted breaking to get the market to come down, to come toward the extreme gap. So if you try to follow it up, like I'd said, do not do, you lost your shirt now. You've got to be patient as a trader and wait for the trades to come to you. Technically, structure broken. Knowing also that the extreme gap is usually closed, very high probability for the FTSE, so we should trade that. We're on a 16 pip target, and then we have a 10 pip risk. So you can come out at 10 pips for a 1% win. or you can come out at the X gap for a 1.6% return. So watch that come through. Just looking at the other instruments here. Just keeping an eye on USD Japani, because USD Japani has just triggered our short as well, a little bit further down. So we can go and look at that. So that fractal break has just triggered now. So we are short on USD Japani. Oh, USD yen, sorry. People are asking me what Japani is. Japanese yen, sorry. And we are looking to make a few rupees. We're looking to make some pips and pounds out of that. I'll put an alert down below here, right down into the, just for around about 10 pip mark, which is the 1% risk reward. There's the 1% risk reward, boom. And there is no harm in taking money off a table. No one's ever gone broke taking money off a table. So if you want to just try and, because we are going against the trend, if you want to go for the 1%, then do so. If this alarm goes off, then we're going to drop down into 1 minute or less, just to see how the market's going to react to the bottom of this overnight action here. Okay. I'll look at the USD Japani for you. As we triggered in there. Anyone done the USD Japani trade in the room?
Yeah, I did.
Right. Okay. So here we are. This was the break here. And we're putting our stops above that previous swing high here. Can't see it on a 1 hour chart. Look at that. Absolutely mothering it under the 9 EMA. 15, we having very little resistance coming down. But nevertheless, we have got a wee bit of resistance here. And our stops are above that. And we're looking for this market to give it up. We zoom right out. Normally, after the news on the Japanese yen and also news on the ceasefire with the dollar getting weaker, this seems an obvious play. For a belts and braces trade, then you'd want to be trading under 14,474, under the 4 hour. The thing is, when you're trading so far away from it on news, etc., and escalations, at some point markets do have to reverse, and they take quite a while to get the perfect setup. So at some point, you can't just rely on technicals. You got to look at the political, the sentiment, socioeconomic issues, and the macroeconomic events of the day as well, in which to make a decision. So as you know, in the room, we try and get all the fundamentals understood and appreciated, and then we need the technicals to align with the fundamentals. So we have the best of both worlds. We have a great technical setup for the day, which is backed by socioeconomic, macroeconomic, and political, and it just doesn't get any better than that as a trader, going with the overall thoughts and trends. Let's take this off. So I'm just waiting for that one to do its thing. The other thing that really plunged off is gold, of course. So just ignore this trade. We're absolutely. Do you know? Should I take the trade off? if I'm the only one in the room with a trade-off, yeah. I'll take the trade-off because I've locked in 3%. I'm just going for a really greedy number there, but this is what we're doing live in the room. So we'll record the live, not something that I'd give you as a fait accompli, really. So I'll just take this. We're on roughly 50 pip stops. And so I'll just throw that off. I'll go cash that in, and we'll monitor what we're doing now, today, and live.
Alert triggered. Alert triggered. Alert triggered.
Let's go back because we've been alerted.
Alert triggered.
Right, so there's your 1%, bang. Everyone, if you want to take 1%, please do. What you wouldn't want to do now is to make this completely risk-free anyway. Did anyone take the 1%, by the way? Absolutely fine doing that.
Yeah, I did. Yeah.
Yeah, it's really good. You know, never complain about getting 1-to-1. Never. We are going against the trend after all. What I want to do is, you know, I'm happy now to make this risk-free and then drop into the lower time frames and practice the technique using the 9 EMA right into an X gap. So we'll go from 5 minutes down into 1 minute. What we're looking, let's get rid of some of the painting by numbers, coloring bits. So you can see that whacked a full 1% target. Very good indeed. Now, the interesting thing in the FTSE, as people will know in the room, is it often moves on a one-to, you know, it often moves on an ATR basis. So it's 8 pips today, and we were 10 for a full 10 move. You normally see an ATR move. Now, here we've got, what I want to do is to try and extend profits as long as we can. So what we do here is we drop it into a 1 minute time frame, and we look at being able to keep trading in the direction of the trend, but we want to make sure that we're staying under the 9 EMA. The wicks don't matter. The wicks don't matter. We're completely risk-free. What we want is this area here to close. What we are seeing here is people all trying to buy off this confluence level. That's what we're observing at the moment. So what we're looking for here is we're looking for a convincing close of the 9 EMA. If we don't get that convincing close, in other words, closing above the 9 EMA, we're right on it there.
Alert triggered.
Carry on going down.
Alert triggered.
You know, you can get jittery, and you know what you should do is, this is your conscience, this is your nerves. If the 9 EMA is broken, not a wick, they don't count. If we get a closing body under the 9 EMA, then really you want to be out. We're still getting a lot of people trying to buy into this area now. It's all trigger. It's because of the ceasefire. You can see people's behavior. Trigger fingers. I don't like this action at all. We're getting rejections now. The closing gap is usually a very high probability. Extreme gap, I should say. So we're just watching this. The thing I don't like is we've got rejection pins to this level, rejection pins into here. The unbalanced volume is down on the 5 minute, and the Renko blocks are red. So it's all showing a bit of negativity. We are in a very strong bull market at the moment. We're trying to push water up a hill using a colander at the moment. But because we know there are holes in the market, we're heading for those cash holes. I'm just wondering whether we should just take our 1-to-1 if we can get it here. I'm going to really tighten everything up now. We're going to put our stops above these rejection pins. So if we lose, we win. And if we win more. We're just looking at this bear bullfight here live. USD Japanese in the money now, which is nice. We're looking really for nearly 2% out of that. Some of us have got 1% already on the FTSE, which is nice. So a 15-minute bar reversal on the FTSE going long would be great. Hi, Alice. We are struggling at these levels, aren't we? Yeah, we are short on, this is just for Alice, short USD, Japan, and FTSE, as you can see live. Wow, we are struggling at these levels. I kind of would be minded, obviously we can't lose. If we lose, we win. If we win more. So, but we're front running this extreme gap. Pinning the backside, so 0.60% up point here. It's a real fight going on, and really probably two things to do here. If we get any convincing bars coming down, then probably stay with it. But you can see we've got rejection pins here and rejection pins here, but we are still trading under the 9 EMA. If you look on YouTube, there's a video on YouTube about how to extend profits using the 9 EMA, and it's a full tutorial on that. So have a look at that if you haven't already seen it. Unbalanced volume is still down. We're still closing under the 9 EMA, and it's just a matter of watching this. Watching what happens. We can't lose. So what I would say is if we do get quite a few buyers into this, then 50 above Camarilla breakout long, above this level here. Let's get rid of that. Above cam level, then I would certainly take a 15-minute bar. With a 10-pip stop, move your stop now down to 5, guaranteeing 0.5%. So if we lose, we make 0.5%. If we hit our target, we make 1.6%. So it's completely risk-free. And USD Japan is moving in our favor as well. So that's nice. Did anyone take the 1% now? We've been hesitating around here. The reason I'll tell you now in the room, guys, the reason I haven't took the 1% here is kind of one
Alert
to
triggered.
actually demonstrate live using a 9
Alert triggered.
to extend profits. Because there's no point in just doing a video with hindsight. You've got to demonstrate to people it works and how you actually use it. So hopefully we are recording for YouTube here as well. So people will be able to
Alert
follow
triggered.
this on extending profits. And then I can attach a video on the back of this when we've finished to do a full detail on how to actually do that as well. But this really is a problem here. A lot of people don't know these pivots exist. To be honest, if you're not using the pivots, you need your head read, because everyone, all the pro traders use pivots in the market. You don't know where the pivots are, you don't know where the profit targets are, you don't know what the market makers are obliged to do to help close the cash trading gaps. So you're blind, really. So, right, okay, I'll just get rid of this. Is yesterday's closing gap, that one. So you can see where we are. We're overcooked on the stochastic. Market's coming down, got a lovely flat 15-minute bar flat top. We want the gap to get closed. Now, this is the issue here, the bottom here. So if you've got retail traders trading this and they don't know, we don't know what's there, we're getting lots of people trying to get value in a bargain down here after the ceasefire. I placed a stop loss 1-4. All right, yeah, Michael, at daily edge, I think personal view is if you haven't got the daily edge, you don't get to subscribe to daily edge. You need to let your head read. We spend a lot on AI technology to gather the information. I then do a technical overlay on what's going to happen, and price of a cup of coffee a week. It's just it's designed for my trading group here. But I'll let everyone outside now get access to that. So coming down for a 1.6% hit. I don't know what 145.26, that sounds like an MT4, MT5 number. Ah, right. Yeah, that's USD Japan. The stop is, in your speak, 14554. That's the stop on USD Japan, and we'll go and look at that. So let's go back into this 1 minute. Price action, the trend is your friend on price action. This is where we might start to see buys, a lot of buys come in. This is my watch out area. As you can see, it might be worth just taking. This is me absolutely wringing its neck. Let's put a few more pips under the belt. Just another 0.6% if we're wrong. Come on, let's just push that down a wee bit there and get that. Good old IG have not closed us out here. That should have gone. It eventually has gone. So that is really how, when you get into a confluence area or a support area, you can see that the other retail traders all tried to buy, lost the shirt. There was an extreme gap there. Boom, 1.6%. So that was 30 minutes and you've earned a full day's worth of money and 0.6% of tomorrow's money as well. So that's right. That's nice. So the actual USD JPY stop. My stops look a little bit weird, guys. It's because we use spread accounts and every pip counts. So we rather than being 145.262 as Alice has put in, that would read 14,500. So the actual stop in MT4 speak will be 145.145. 5.54. Oh, be good if I could spell as well. Can you actually edit? Can I add it? I don't think I can add that, can I? Remove, and I'll do it again. USD JPY stock is set at 145.54. Okay. So just one FTSE, we call it X gap, because that's called the extreme gap trade. Made 1.6%. So nice. Right. So expect a bounce here. Now if put the pivots on here. Now, right, people are I'm not showing people, I'm just talking about it. Right, so if you go to my website, those pivots, where are we? The daily, if you haven't got the daily edge, not daily edge, the 15-minute guide, because I'm going to do a 15-minute bar trade in a minute as well. Here you are. Free, download it, use it, and make sure you subscribe on here, because if you're a subscriber, you get all the updates as well. If you just download it once, you miss all the updates. You don't subscribe. So I think there's a button there. Oops, what have I done? Right. So yeah, all this has got is 5-star reviews. So it's really, really good. So if you're going to get this, it should come up here. Get rid of this. Check out. There it is, subscribe. So just make sure you get updates, because it's set so you can't, so you have to subscribe to get the info. Now here, I did mention, so download the 15-minute bar guide. That'll do what it says on the can. We're going to do that now. I did mention we would probably get a bounce off C-Pole. That's Camarilla breakout long. It's a Camarilla level, and it's an R4 level, and we should get that bounce. We're down in the low levels at the moment, but if you wind out, oh yeah, I forgot to show you the edge, didn't I? Too busy wound up in trading, but after all, that's what we're there for, a trade. Let's go and get that up again. And then texts. Get that website up again. Dunk. Where are we? Get the basket off. Switch this off. Delete, delete, delete. Continue shopping. Right, here we are. So if you go to tools, bots, there we are, daily edge. We've only got 5-star reviews on the daily edge as well. So that's the daily edge. And that is this document here that tells you exactly what's going on in the market. All hyperlinked, so you can read every detail behind all this. This is from over 160 sites, including Bloomberg, Reuters, and all the major players in the market. Then all the notable economic events, what's going on, a bit of wording behind that to give you context, to give you background. Some people use My Forex Factory or IG or other areas. I give you all the background behind all this as well. So you can read all that. And then once you've read all that, I can show you the actual timing of all the events as well. Further reading, if you like to have a look, some interesting points for the day with the links on here. So you can just hit, for instance, here, open Google, and it will take you to the article. And you can do a lot further reading and all the expansive times there. So all hyperlinked. there it is. And then we use AI to determine at least 3 different independent sources all saying the same thing. So then we put these into the buy recommendations. Then I do an overview of where to get in, the gaps to close, what we're going to do. Breaking, we're just talking about this now, C-ball. If we don't break that, then we're looking for the bounce to 88.24, 88.24, which is that target there. We've already nearly hit it already. And it just tells you exactly where I think, personally, we are going to, this is into my private trading room. You can't, if you're on YouTube, you obviously can't see that, but we're a group of people that we're trading live, and then we stream all our trades onto here. There is a summer offer as well to join. If you want to join my private trading group, if you go onto the website, you'll see it's 20% off at the moment. But more important things, we've got trades on for this afternoon on the US 500, exactly where we think the market's going to go to the pip. USD Japan, and we need to have a look at that now. Crude, we've had a quick look at crude. Gold, I've not looked at gold yet. USD Japan, we've looked at USD Japan, and indeed we short on USD Japan as well. So that's every single day before the market opens, what's going to happen, where it's going to go. And it works out about £2.50 a week. So you just subscribe down here, and you can jump in, jump out, do whatever you want to do, really. Information goes straight to your box. Have a look at the reviews, see what people think. Right. So 15 C-bomb. So I did say, if we get that bounce of C-bomb, it's highly likely the extreme gap's going to close, and it did. And we then demonstrated how to extend a profit using the 9 EMA. So we did that as well. And we took that from a 1-to-1 to a risking 1% and got 1.6 for it back. Because of the rah-rah nature of the ceasefire, and because oil has dropped as well, it's going to be quite difficult for FTSE to really go higher. But you can see here, because the financials, 23% of the FTSE's got the financials of, well, between the financials and pharma, that's not really affected on this. The market's getting really pushed up. If oil started a rah-rah, this would just go explosive today. But we'll have to have a look at oil, because oil doesn't look like it's moving too much at the moment, because if it was, then the FTSE would be moving as well. 15-minute bar off here, I think. I'm not sure we will get the closing gap today. We've got the extreme gap, but the closing gap, a 15-minute bar off here, could be good. Or if you want to be super aggressive, turn your fractals on. Turn your frackers on. Oh yeah, I forgot about that. I'll show you where the frackers are. If you're watching this from outside the room, if you go to here, if it works, there we go. So there's a daily edge. There's fractal indicators for trading view, fractal indicators for pro real time that we use. I need to do a video on this, the Dirty Dozen bots. We're on for over 250% this year. Return on a Dirty Dozen, they now come down from 480 to 299. We're halfway through the year, and that Dirty Dozen is now 17 bots that we use, and we have a community to trade those. If you're interested, give me a shout after this rather than take up time here. And that's the OBV indicators. And these are the cash pivots here. So those are the cash pivots. They are only for Pro Real Time, so do not download them if you're not using Pro Real Time. They're of no use to you. So these are the pivots that you can see here. So a 5-minute tracker we've got a convincing bounce off C-ball here. The interesting thing is, if you sat with 1.6 in your pocket, we're already thanks Lee. Yeah, it's an absolute belter of a tool, that fractal. Absolute belter of a tool. Well, I would do. I'd say that because I designed it. But it works really, really good. It does work very, very good, and it takes a lot of decision making off your hands. It is an absolute game changer to traders that don't realize the market's moving fractals. Absolute game changer. So what we can do in here, if the market moves okay in a fractal sequence, we could probably demonstrate to you fractal trading as well. Or we can show you the 15-minute bar reversal. The 15-minute bar reversal is absolute perfect setup. If you are super aggressive, then you could actually trade this on the rejection pin here, which would be a trade above here on a 2-ring low. But we don't need to. We've made a lot of money already. We do not need to go risking our profits. So what I would say here would be, let's have a 5-minute fracker or a 15-minute bar. And yeah, we can do that. Let's go over to the other things that are on the daily edge now. So what I'm going to do is I'm going to put an alert a bit higher up here, an alert a little bit further down here. The reason I'm putting the alert further down here is because we do have a fractal break to close that gap, which is the cash gap, not the extreme gap. We do need to get at least an ATR move away from there, which is 8 pips. And you can see we've got 21 pip run down into there. So we've got plenty to have a go at. The thing is, can I get my pen? So if I turn this to color, bright orange, that'll do. And I'm in fading pen. This might be what we call a phase wave. Markets only move in 2 directions. They either go down or they go up. They don't do anything else. But the moving wave, the moving fractals, where fractals are constituent breakdown parts of phase waves. So this is the wave 1, big impulsive wave 1. Run up to wave 2, then you can go for another wave 1 to come down and close that gap. That is a distinct possibility. You can see we've now got a fractal setting up here for a breakaway up here. And that breakaway fracker, I'll just draw this. Just so that's where the fractal will draw there. So long as this bar stays below this bar, you will get a fractal right in here. And if you get a fractal in here, then you take a break of that fractal, stop at the swing low, that's 19.4, excuse me. You want to round that by 1 pip, round numbers, 20, spreads 1, 21, and a pip, 22, to stop a double tap knocking you out. And that's what you would put in here, 22 pip stop. If that was a fractal and it's disappeared, it's not a fractal anymore. So with a 22 pip stop and the target of 88,
Alert trigger.
or that would have given you a 1-to-1 risk reward ratio, and you could have done that fractal, but that's gone.
Alert trigger.
But these are the things you got to, as a trader, you got to watch out for. The market is always right, no matter what you think, and you look how the market's developing. Now, some people can do a 5-minute bar, super aggressive, but in the room, no one will do this, I wouldn't have thought. For the simple reason, we've already made profit for the day. The target is 2% a week every week, which is phenomenal, really. Most people at best will make 2 to 4% a month. We're looking at 2% a week, sometimes more. And here, because when I mean this, just explain a little bit about this price action. We turn the frackers off, so we don't need to see them just at the moment. So here, lovely, beautiful bars, flat-bottomed bars. In other words, price, the
Alert
market
trigger.
has bought and it's
Alert
accepted
trigger.
this is the low straight away, the market's gone up. We've got
Alert
another,
trigger.
another flat bottom here again. Now, if you're super
Alert
aggressive
trigger.
and the trend is with you at all levels, from 5 minutes all the way to the day, on every time frame in between, is saying this market's going up.
Alert
The
trigger.
price action is also saying it's going up because the market's going to potentially close above the 9. So with that in mind, you could be super aggressive if you hadn't traded by now, and you'd have a 26 pip stop. Now the issue is you've only got 26 pips to the downside for a stop, and the target is only 20 pips away. So you haven't got a one-to-one risk reward. The big pivot is R3, and that's only 23. So the thing that you could do is when you get up to a key level, and at the moment, trading these low levels, the key level, of course, is here. I have all these pre-written stuff in, so I can get rid of that. That's kind of key level. So what you would do is the market's coming up to here, you would then drop into a 1 minute, and you would keep trading so long as the market comes up. Now, Andy's Mr. Argent's not in. He sometimes trades pretty aggressively here. Or if we bounce off camera the breakout one, then one of the aggressive scalping.
Alert trigger.
Now, you only do this when you're an experienced trader and you're confident and you are confident in the strategy, which is you look for a break above the 9 EMA on a 1 minute on a very strong indication, which we are from 1 minute all the way through 1 day. On every 200 EMA, it's all saying yes. So you enter here or here, and you stay in there like we did coming down here. You stay in until the market closes below the 9 EMA, and you don't move it until that happens. What you can do is manage your risk by moving your risk, and you can do that in 2 different ways. You can follow the swing lows under here, or you can use your fractal tool as a risk management tool. So you can see reversal fractals here. So let's say you got in, forget that one because that's just cherry picking. That is the one, and you're in, and you're trading below swing lows. So that's what you're looking for really on the 1 minute. And then now the market's moved up, I'll just use this, you'd move your stop to entry here, and then you put it under this fracker here as a stop, and then you could move it under this fracker here as your next stop, showing that you're gaining a little bit of, well, what you're actually doing is put your position completely risk-free. This market looks like it may well close under the 9 EMA, but we don't know yet. That might be a wick. So we're managing fractal risk. So we could, on the way down, we could have done the same. We could use this fracking tool all the way down until the final conclusion, and we made our money. So you can do it through few ways. You could say, if the market closes above the 9 EMA, we're out. If the market hits my reversal fractal, then we're out. So on this illustration here, you can see, because it's an illustration because we didn't trade it, the market closed here and it confirmed here. Market confirmed here. So when the market closed and finished here, you'd have been out. But if you look at the reversal fractal, you'd probably you're out within half a pip of the same. It's a really good way of trying to follow a trend, try to get an early doors, try to squeeze it. And fractals are great for breakouts, but they are also great for managing your risk. And if you think this is another little trick you can do. If you think that fracker break going out is good to do, 1 minute frackers, and indeed it is, but the sensitivity is too much. So what you can actually do is you can add another fracker here. So what you can do is you go to your configure, and then you choose your fracker, yeah, add another fracker, and then you modify this fracker. So what you're wanting to do is use fractal tools as not only a breakaway, but a stop tracker. So you want a bit more wiggle room on the bottom, for argument's sake. And the set at CP1, closing price 1. But what you can do is you want to use it as a short, the red, so you can turn that off. And then what you can do is say closing price 2. In other words, the fractal starts drawing on the second candle that has been developed, not the first. So if I put this up, you'll see a second one here, there, and you can smooth that out. It still would have broken anyway.
Alert trigger.
It's just showing you what you can do. And I use
Alert
between
trigger.
1 and 6 when you're trading. 6 would be the absolute max. So you do 1 as a breakaway and your trail is 6. But this is on 1 minute, absolutely a bit daft, really. But what
Alert
you can
trigger.
do is
Alert trigger.
you can use that fractal here. You can turn the short one off, so the short one disappears, and then you can
Alert trigger.
bring this out to have a wider stop. But just thought I would show you that. I'll just make sure I put the buy-in on that one, short and long. We'll take number 2 off. We'll delete that. There's all sorts of things you can do in flexible. So this is interesting now. We now get into, do we want to risk closing the gap? We've made, the thing about consider is you made 1.6%. For the room, I don't think we'll do that. I think what we'll do is we will look for all the pivot boys. So there are lots of people, lots of traders on the FTSE that trade the pivot. So here, the pivot and the close will be of great interest to lots of people who trade the FTSE regularly, understand the FTSE. So I think what we'll do, we won't take a direct break of here. We'll wait till the market comes here. We'll be patient and we'll buy what's called fade of the fill. So we'll fade in as this market fills the closing gap. So, and that fill could start to happen on a daily pivot. So we could do a 5-minute fractal or a 15-minute bar. This would be a perfect 15-minute bar and sequence of fractals to go all the way to my target. That was there. I know we missed it by 1 pip anyway, but that was morning volatility. So let's come off this. Delete that alert and delete that alert. We don't need that. It's going to be very hard to get a 1-to-1, but between this level, with this volatility, the size of the bars, and the 88.24, we don't need it. We've made the money, really, so you don't really actually need to do that. Let's go back and have a look at where we are with the other things on the edge. So we've got 50 pips stop, 34 pips. We're using 34 pips of that. We're going for a 99 pip target, just under 2%. If we fail, that's 1%. Don't forget, we've already got 1.6 in the bank. So our sequence of trading would mean at the end of the day, we're up 0.6%. Well on target for hitting 2% at the end of the week. Nevertheless, every trade's on its own. You can see the danger was here, people would buy. On balance volume, look at that. Volume comes straight in. Here, can you see there when I put my cursor there? It indicates here on that red line, the market's probably going to reverse. There's the unbalanced volume. That's an indicator that I designed and developed as well. This is one of the only indicators that is a forward-looking indicator. This tells you when the market's going to move, before it moved, that indication was there when it was red. And it's telling you also here on the ATR, there's more participants. So we've got more participants in the market with volume being bought. Now, what we're looking for here is the bears to start eyeing this target up here to short here on a support and resistance. That's what we're expecting here. So people will be buying, they'll get stamped all over, and the bears will push that back down. If you're not in this trade yet, then it will be prudent to actually wait to see where this runs out. So none of these tops have ever been broken yet. We've got a double tap reversal test here on a 5 minute. And I'll just get rid of this painting by numbers at the moment so it's nice and clear. You can see price action all the way down to this bottom. We wanted to do is fractal break, and then boom, all the buyers come in to try and lift it out on a negative connotation. But we'll see. If we get, well, you know, this morning I've already made best part of 3% on this morning. If you look at the video, I cashed out at 100 and what did I cash out on? I'm just going to look at the history. 124 pips. So I can't get too upset. Like to win every trade that we do, of course, but can't get too upset if that doesn't happen. BTC bot did a stop to entry and came out for 21 0.05, 420 pips. That was our BTC. BTC's on its way off. Come out at 105,797. Have a quick look at that. So that took a reversal. There are two more robots actually trading this. There's the BTC Relentless, Scalper, and the BTC 4115. That's your 415 reversal, but for Bitcoin. And that is put in at using a robot, one of the robots that we use. Come on, come on, come on. IG aren't particularly good at supplying data at the 4-hour level for cryptocurrencies. Don't know why they can't do it. We just seem getting capable of being consistent. So we won't wait for them. Let's go and have a look at gold. Right. Come on, load up. Right, so on gold, we've turned the gold box off, and that's probably one of the first times I've done that for quite a long time. So we have broken the 200 sentiment, obviously risk on. People aren't running to safe haven currencies. So what we're going to look at. So you've closed your USD JPY. Oh dear. Now, why did you do that, Alice? There was no reason to close the USD Japaning. I don't want to put you on the spot, but you know, no reason to close USD Japaning. That's a fear trade of closing out, but you may have been right. But we're not closing it. Right. So we're under 4-hour 200 EMA. 1 hour 200 EMA. Oops, get rid of this. This is, I was just looking at this morning. The amount of this dropping, it just keeps dropping and dropping. There's a 200 EMA there, and on the 15 minute, it's all looking pretty bad. Let's just get rid of some of these things now and have a look at it we know from the ceasefire that people are going to run off safe haven currencies. How long is that ceasefire going to last? I don't know. Two pretty volatile countries, two Middle Eastern countries. Don't know. But if we start trading, I did put a level, if we start trading above a particular level, then where are we with PDF? Where's my I want to make sure, you know, that I'm not just, this isn't just ad hoc. I've already done the analyses. If we start, right, okay. Yeah, we've got to be only selling below 33.30. So under 33.30, I'm a seller in the market. Above that, I am not. And what I would do for guys in the room is if you see a 15-minute bar, once we're above 33.30, I would try and trade that back up into, for instance, these levels here. So this level here, I would, if I can get a 1-to-1 on a 15-minute bar reversal, just on the basis of a bounce back, then I would have a look at trading that. But we need to be above 33.30. Below 33.30, then I would trade.
Alert triggered.
Would trade everything short. So, nothing to see on gold yet. The targets are 3,300. If there is a fractal break here, put the fractal tool on. So there is a fractal break here, but that fractal break has been negated. It's been negated for the simple reason the fractal stops being blown out. So if you're going to do a fractal, you have to wait for a new fractal setup.
Alert triggered.
Let's go and have a look at the alert triggered again. Crude going off. Right, let's go and have a look at crude then.
Alert triggered.
These are all my tools here that we can use. I need to put them all in. We've got 57 different AI tools. So I can just look at very quickly where is a fantastic setup. There's one there for going long. It tells me automatically everything's pulled back, ready to go. And it's dynamic, finds them straight away, short very quick. It's saying gold's short. Oh, we know that already. If we're looking at markets pulling back on a 1 hour, it's saying this is what USD Japani is long. I mean Euro Japani we know is long. What I was waiting for, we'll come at this once I go back to crude. I don't want to dance around too much. I was looking for a 61.8% Fibbo. We've got that. You can see the Fibbo traders on that green line have started to try and trade it. Let's go back to crude and then Euro Japani. Remind me if I don't go back on Euro Japani, we need to before we go. Where's crude gone? Oh, there it is. So crude, absolute stonking shoot down. As I'm not particularly keen after this long bounce, you would expect at least a 50% Fibbo. A 50, not Fibbo, 50% retrace level. So kind of would, even if it's aggressive, I would expect a bounce into that region at least before going short again. You never know, do you? If the market does break these bottoms, then the market's given up, hasn't it? It's let loose, and we're going to see 6,200 pretty short shift after that. But it's got to give it up. So this is a potential double tap reversal going short into these levels. If you are keen on going short on crude. And there's no reason why you guys in the room need to do this, really. You've got money in your pocket. You don't need to give the money back to the market. You could walk the dog on a short under here with a stop above that swing high. So what you would do, you'd have an order in here, 3 pips spread, 103, 104 pips, and you would then go up to target down here. So you'd be looking at best part of 4% trade. If you're really behind crude going short today, on balance volume, pretty neutral on the 1 hour into the 15 minutes. That's where it started to buy here. The volume started to come through and the participants are coming in as well. So you could just put an alert here. Wait for your next 15-minute bar, like so. Just like that, 15-minute bar there, perfect 15-minute bar, another 15-minute bar, another 15, another
Alert
15,
triggered.
so on. These are all perfect bars to trade. That is a perfect storm there, that 15-minute bar, closing under there, stopping with a swing high, and you'd be looking for a 1-to-1 and that 15-minute bar reversal. Boom, did it easy. Got to use a discipline of let the market tell you what is where it's going. At the moment, there's nothing too trady here apart from using alerts really to alert yourself off if it's going to come down, alert yourself up here if it's going to be a breakaway, and don't touch it until that happens. Right, it's getting to 9:15 now, and we're going to go and trade. Alice, the Germany 40 may well go along. It was the only one that went along yesterday. But what we're doing, we're trying to curtail what we want to do as profitable traders is to focus on just a few assets to rip money out of the market. The idea isn't to trade as many markets as possible. The idea is to rip as much money out of the market as possible using as fewer assets as possible. So it's not complicated, but you're quite right. We'll have a quick look at the German DAX 40 because you've mentioned it, and we'll look at that again. But let's go and look at the things that we hold to be true. In other words, the market analysis we've already done. We don't want to change our minds. We don't want to move our focus. We want to go and look at the things that we've already identified as good possible trades. So USD Japani, we were 35 pips into the risk profile. There's a reason for having the stops, of course. Market's falling over again, isn't it? The market's falling over again, didn't get anywhere near our stop, and it on its way. So to answer your question, Alice, you should never have come out. This is how you lose money, coming out, in and out. So after that wee scolding, can you go in again? Absolutely, yes. Your stops need to be where we said they were, and your target also should be a 1-to-1, or maybe the target that I set anyway, early doors this morning. So let's go back, Euro Japani. So Euro Japani, we zoom right out. You can see, actually get rid of this, it's something we traded earlier. So the market is really walloped up, and you can see on a daily basis where we are. There's the daily and weekly highs. The market's broken up some key levels into here. We had a breakout of here. We've broken up above the previous highs, and we're now right into this confluence area here. My idea today was for the market, after that exhaustive rush up, to pull back and then run it again. So using daily is no use for a day trader, but it's useful to see where we actually are. 4 hours is more useful. So what would we like to see? Well, one bar here, we obviously use that on a 1 hour basis. It's on a 4 hour basis. Be looking for a retrace, a Fibbo retrace, which would be roughly down here on a 61.8% Fibbo. That would be nice. That actually falls in line with the soft resistance areas into here. So that kind of all matches up technically very, very nice, and would align with the reversal to match the socioeconomic sentiment on and a macroeconomic view on Euro Japanese yen. So let's zoom down into the 1 hour. So that was the input. That was a news market come down, spike down. I'll have used that on the 1 hour to look at the Fibbo. They are 61.8% Fibbo. That was very useful. People did try and buy that, as I showed you before, but that's all. It looks like it fails. So you can see the 61.8% Fib, and right on this line, you had that single bull who was trying to buy. Nothing to see here, nothing whatsoever. If you want to trade this, which I want to today, I'm going to put an alert a little bit higher here, right on the 15-minute 200 EMA, and I'm going to put an alert a lot further down into this level here. If the market comes back up, then we can look at targeting the targets we've put in the daily edge, or previous targets, get rid of those. We can wait for the market to come lower and then target the targets we've got in the daily edge. Oh, excellent. Flipping heck. BBC reporting that the ceasefire has broken down. Well, that didn't last long from 5:30 this morning, did it? Ah, dear me. So we be very careful, guys, then, because if crude breaks up, then I'm on the crude wagon going back long again. And gold, if gold then decides to start trading above 33.30, closing above 33.30, I will take a 15-minute bar, because can we trust the Middle East? History will give us a view on that, and then we know what that view is. So Euro Japan is long. We've got a few of these. Euro pound, again screaming long for a buy. Swiss Japanese safe haven, again safe haven. It's so clear when you look at these reversals. What else can we do? We don't need to do anything else. I noticed that USD Japan leads all the couples. So where is the direction on the US? And with a pit. All right. So USD Japan here. So what we're looking for here, we're looking at USD being weak, aren't we? And we can test that by looking at where the Dixie is. So if we do an overlay of the Dixie, which is a dollar, where's the dollar? Put the dollar in, dollar basket, that should be going down. So put the dollar basket in. There we go. Where is it? Where's the Dixie? There it is. There you can see that as the dollar basket goes down, you can see it's a great little tool. So if this is coming down, then you can more or less guarantee that Euro USD is going up, because I can see what's happened to the basket. So if I put the Euro USD, Euro USD, then you'll see that guaranteed going up. There we are, that going up. If we make them converge a little bit closer, it's just about a mirror image. You can see there. There is a great document that we have, which gives you, I'll just go and grab it off a different screen. HARKO Day Trading. HARKO Day Trading, recorded sessions. Got every single session that we've done every day since 2019, every single month, all recorded live. Start here. This is where I have my little books and stuff that I write. Motion intelligence, Forex, the basics, that'll do. This is my 13-page book on how to trade the Forex. Right, so that's a learning center. Where have we got it? Well, the dollar, it shows you the dollar basket and how to read against it. And obviously here, this proves to you that Forex is not a 24-hour market. You've got 1, 2, 3, 4, 5. You've got 6 servers all running at different time frames, serving Asia Pacific market, Northern Europe and Northern American markets. And knowing exactly when these switch on and switch off is key to every Forex trader, so you can know what's going on. This just tells you when the best time is to trade, all based on GMT. So from 5:30 to 9:30 coming up now is the best time. Gets to 9:30, go and walk the dog, have a cup of coffee, go and do something less boring instead. Because the volatility doesn't start coming back up again until about 10:30. This is all the volatility here. This is data extracted from 30 million trades on 100,000 users. So get back to the point. Here we are, dollar basket. So part of the dollar basket, the trade, if you've got something that's got to trade against something, the euro is 57% weighted against the dollar basket, Japanese yen 13, British pound. So when you're looking at these heavyweights here, if the dollar is screaming high, then the euro is going to be negative, so is the Japanese yen, so is the pound, and vice versa. Anyway, that's just from the learning center. Right, turn the Dixie off. Got a good little trick if you're using PRT. I don't know if you can do the same thing in TradingView. Don't really use TradingView. It hasn't got a patch on PRT, so there's no point in using an inferior package, really. Go on, look now, just look at Alice. I mean USD Japan here. So I understand that the USD leads all the couples containing. No, that's wrong. Absolutely wrong, Alice. Euro Japanese yen has different economics to USD Japanese yen, because you are trading Northern American markets, and when you are trading Euro Japanese, you're trading Northern European markets, so they're very different. So they are very different. So as you know, as you will see, you will have Euro Japan going up and we'll have USD Japan going down for different reasons. So I don't know who told you that. I would say research a little bit more.
Alert triggered.
But the thing is, and this goes for everyone watching in the room and in the trading room and on YouTube, don't believe everything that you read, because some people spout out loads of gumph that is just misleading. And what you really need to know is that, you know, if Northern America is the same as Northern Europe, why would there be 2 different markets? There just isn't. So 2 different markets run in different ways with different economic drivers and announcements, and therefore the where the markets react to the Japanese yen are slightly differently. Okay, the yen might be strong, might be weak, whatever, but in comparison, the euro might have a different strength to the US dollar. Now, knowing that the US dollar has got a heavy constituent of the Japanese yen in it as well is good to know, like I've just shown you. But need to know all this underlying
Alert triggered.
details so you know where the
Alert
market
triggered.
might possibly move to.
Alert triggered. Alert triggered.
I'm just going to have one little look at my alert trigger because that's telling me something. It's shouting at me to go and have a look. Euro, where's euro yen? Euro yen.
Alert trigger.
Euro yen. So looking for this euro yen to do a reversal for us here, which would be nice if it can do that. Yeah. So USD Japanese yen is only 5 pips now from getting into a winning position. Let's have a look what this alert trigger is telling me before we go on. I don't know which one it was now. Let's have a look at FTSE then. See if the FTSE is getting towards reversing or no. Yeah, it was the FTSE here. So we're 2 pips off. Japanese USD Japani going into profit again. You reminded me for the DAX. I've not done the pivots on the DAX, but the DAX is now moved to trading positive. And on the 1 hour negative. This is old hat, old news from selling to go down. And the pivot. Yeah, that's interesting. That must have been driven. We've got a calendar. So that's a news reaction. Do not follow after a news reaction because you're liable to lose your share. So this is on the IFR assessments, business climate change. A little bit positive. That will reflect in oh, where's that? What's this? Oh, this is this, isn't it? I almost denied 2 of them off. That's been sat behind the charts. So this is news, movements on the news. You don't follow, no one ever follows movement on the news. The only news that you can trade, we trade a FTSE expiry because we have a very specific strategy to handle that. Non-farm payrolls, very specific strategy to handle that. Normal news, let the news happen, let the market thrash around, let it settle for an hour, then have a look at the macro event that the news revealed, look at the technicals and take your trade. Do not follow a market straight on news. Not unless you have a very specific strategy to handle that news event on the time. Any questions, guys, before I go on? Yeah, 15-minute bar there. There's a 15-minute bar here as well. And a fractal. So yeah, all good. Okay. Okay. Bye, guys. And see you next Tuesday. If I can spell it all correctly. Right, I'll end the stream and we will get off. All right, guys. Thanks for coming on board. Speak
Thank
to you.
you.
Alert triggered.
Bye-bye.
Alert triggered.
All right.